The next session is Beyond the Halving, Bitcoin's role in a maturing industry and a climate-conscious world. We have three amazing speakers and, of course, a rock star moderator. The moderator is Bill Tai, but firstly, Fred Thiel. Fred is Marathon Digital Holdings Chief Executive Officer, largest, most energy-efficient and technologically advanced Bitcoin mining company. Kerri Langlais, Chief Strategy Officer for TeraWulf, Bitcoin mining company accelerating the transition to a zero-carbon future. Muneeb Ali is the co-founder of Stacks, a decentralized network that enables smart contracts for Bitcoin. He's also the CEO of Trust Machines, who just raised $150 million to build the largest ecosystem of Bitcoin applications. But a fun fact about him, he was also a technical advisor to the HBO show Silicon Valley. But Bill Tai, as the moderator, he has been funding startups as a VC since 1991. This is a really interesting fact. So he's either the first investor or an investor in about 20 startups that have listed, 20 plus startups that have actually listed. That's just an extraordinary background. Some of them are very famous brands. That's Zoom, Canva, Dapper Labs, Safety Culture. But he's also in this topic an early backer of Bitfury Group, having personally funded their Bitcoin mining ASIC, and he's also board chair of one of North America's largest NASDAQ-listed Bitcoin and Ethereum mining operations, Hut 8. He was also, background, badge number 001 at TSMC, Taiwan Semiconductor. I love that. Went on to handle the IPOs of legendary companies such as Atmel, Cirrus Logic, and Zilog. He supports many for good initiatives, and he's among some of the catalytic advisors to Giga.global, bringing broadband connectivity to schools around the world. Please welcome Bill Tai and his panel to the stage.
All right, thank you, everybody. Look at your iPads or your cell phones. The bios of everybody on the panel are in there, and there is a little button if you look at the agenda for the Q&A section to pop questions on here, which we'll get in end of the day. Let's use them. As Eric talked about, 11 years ago, I had an interesting decision as a venture capitalist. Venture people obviously like long-term businesses where they don't see a bunch of cliffs in front of them. And here, obviously, the title indicates that having every couple of years, every 4 years, your revenue is going to get cut in half. And it's kind of a scary business. And then the entire premise of Bitcoin as a miner was you spend this money, put up this infrastructure, you win these little mining rewards, and then it stops, And so, I was thinking, well, okay, do I fund a piece of silicon? Silicon, as you guys know, very, very capital intensive. To put something out there, knowing that periodically the revenue collapses and then it disappears. What is the business? So I wanted to see eventually like a layer 2 thing happen, what later would be called layer 2. It took a while. Ethereum kind of filled that gap for a long time, but it's starting to happen to Bitcoin now. But there was another change that occurred in 2018. The cost of producing electricity with almost every green source, hydro, wind, solar, nuclear, dropped below the cost of producing electricity with fossil fuel. And it was a milestone. And most people don't actually know that, but it's the best source of energy for this industry is green. Mm-hmm. So, with that as kind of background, I'd like to talk to the mining companies here first, so Fred and Kerri. We'll start with Kerri, but I'd love your views on the challenges you guys faced in the same time period that, we did with the companies I worked on in the face of, sourcing energy, putting up things at scale, getting equipment. What are the kinds of things that you've seen happen over that period, and what's coming up?
Sure. Thanks, Bill. So I think, as you mentioned, the industry has come a long way. But even in the advances that we've made, there's still a number of misconceptions or preconceived notions when it comes to Bitcoin mining and energy usage, or even whether Bitcoin mining is an appropriate use for energy. There's a lot of salacious, media articles and such. And so I think to understand sort of the valuable and critical role that Bitcoin mining has to the energy transition and to decarbonization, someone needs to really understand the energy grid and how it was built. And so we used to have a system where you had resources that were dispatchable. So you'd have coal plants or gas plants located outside of high load density areas, outside LA, New York City, et cetera. And when the demand went up, you could ramp up these facilities, and when the demand softened, you can similarly ramp them down. Now, given the decarbonization focus, we have power sources that are by definition intermittent. So the wind blows typically at night, the sun shines when it wants to, and so now instead of having your fuel source, your power source be dispatchable, you need to have your demand effectively be dispatchable. And for me, as a Bitcoin miner, I have not discovered or uncovered any more flexible load than Bitcoin mining that has the ability to serve sort of as a load sink to absorb excess power when it's not used, but also enable the developers of renewable assets to actually get recovery on their investment. I mean, the worst thing you want to happen if you're the owner of a wind turbine or of a solar farm is to be curtailed and actually have that zero marginal cost power just go to waste. And so what Bitcoin mining has been able to do is have a symbiotic relationship with the energy grid where we can help balance the grid. Think about the grid as if it's a paper clip. The more you bend it back and forth, it's eventually going to break. And unfortunately, the grid in the United States is in need of substantial investment. And so until we get there, Bitcoin mining facilities, if located properly, and that's key, have the ability to serve as a tool that your grid operators can use. And I mean, you think about it, we walk around with computers in our pocket every day, and ISOs have been able to operate remotely power plants. It's only a matter of time before they're going to be able to connect directly to Bitcoin mining facilities and actually have that ability to ramp you up and ramp you down. And so to answer your question, Bill, I think one of the challenges that we've had, especially as we think about regulation, how to regulate, where Bitcoin mining facilities are appropriately sited, and what sources of energy they use, I think it's important to understand the value that the grid has with Bitcoin mining, because again, a Bitcoin miner's job is to produce a Bitcoin at the lowest marginal cost. So they're naturally incentivized to go to places where the power is the cheapest. And guess what? Renewable resources have a zero marginal cost. And so if you can use them appropriately, you have a benefit that can be used by the consumers, by the ratepayers, by everybody, and incentivize development.
Kerri, what percentage of your mining assets are green energy?
So we have a facility located in central Pennsylvania. It was actually the first Bitcoin mining facility directly connected to a nuclear power station. So that's 100% zero carbon. And in upstate New York, we are located 20 miles from Niagara Falls. So we use 91% plus hydropower to power that facility.
Awesome.
So we're getting there. Our goal is 100%, but we're close.
Great. And Fred, one of the pioneering and massive companies in the industry. Talk about your journey and your attitude toward green and what you can do with it now, because you're doing some really innovative stuff.
So when we originally started, we were actually mining off a coal plant in Montana. And we exited that and started mining behind the meter at a wind farm in West Texas, where we essentially took the excess wind energy and then used that and then supplemented that with some load off the grid. We've since evolved considerably. Today we mine in Texas, North Dakota, Nebraska, Abu Dhabi, and Paraguay. And so our energy mix today is about 56% true renewable energy, and then the balance is a blend of things which we then offset from a carbon perspective with renewable energy credits. So we go out, purchase renewable energy credits to offset our carbon footprint. We divide our business into two different pieces, and this is kind of unique in the industry. We have grid scale, utility scale mining, where we're a load balancer. So we basically, like Kerri explained, large 100 megawatt, 200 megawatt, essentially dispatchable load, right? So we sit there and can be shut off at any time by the grid operators, and because we enable them to do that, we pay a lower rate for electricity. The other part of our business is what we call energy harvesting. This is where we take biomass, we take methane, we generate electricity with it. We're typically paid to take that material because methane is 80 times more damaging to the environment than carbon dioxide. So we're paid to take that, we generate electricity with it. Bitcoin miners are the perfect converters of heat from electricity. 95% of the energy from electricity ends up as heat in Bitcoin miners. And using some unique immersion technology that we've developed, we can take that heat, capture it, and feed it right back into an industrial process where we actually get paid for the heat. So think of buildings in Finland that have central heating, for example. That's a potential offtake. Right now, we're doing a lot of things within agricultural processes. And so you'll hear a lot more from Marathon this year about some of the projects we're doing in that area. It doesn't scale as quickly as these large utility scale sites, 200 megawatts at a time, but it's incrementally, it's 5, 10, 20, 30, 40, 50 megawatts. And over time, if you think about the amount of biomass that's generated, and I'll use one example. How many people here drink beer? So the problem with beer is when you've fermented that material and turned it into something you drink, there's a lot of leftover material that has to be dealt with, and you can't just dump it. It has to be processed and treated. We have worked with developers that enable us to take this corn and oat and barley material, extract oils from it, then create methane from it, and what you end up at the end is essentially a full use of that waste material, so that what's actually left over at the very end is something that farmers can then use. And so it's a full cycle. So we believe long-term, Bitcoin mining will generate its own electricity. It'll be carbon negative, actually, and will be more of a service to society. And you won't see very many of these utility scale miners anymore. More and more of mining capacity will become micro size. It'll heat buildings, it'll be microgrid for a community, it'll heat spas, pools, restaurants, farms, things like that.
That's really interesting because I think when I got started in the business, one of the reasons Bitfury worked well as a business in the early days is the company found a hydroelectric dam that had been built during the Soviet Uber Empire, and when it broke up, that dam, which it was intended to power 2 cities, the cities didn't get built, so we just took it, and it was a 40, at that time it was massive for Bitcoin mining, it was a 40 megawatt plant. And I'm curious now, so I don't know, when you look for a new site, the model that we used for it was the kind of utility scale is find a place that had a certain amount, and I won't say what that is yet, and then but that could scale to a bigger size, and we wanted target sizes that were big. I'm curious because you guys are still doing utility scale, right?
Yes.
Yeah. So I'm curious, when you find a site, what's your minimum? We'll only go there if we can get this, and then what capacity outlook has to be tied to that?
Yep. So I think there's sort of 3 things when we look at expanding beyond our existing sites, which are scalable in and of themselves. One is the supply-demand imbalance, right? You need to go to a location where there's an excess amount of supply, more than not, so that you can absorb that supply and not be a burden on the grid. Because as soon as you're a burden, it's not going to work. Your model turns upside down and you're not profitable, and the community is not very appreciative. The second thing we think about is sustainability. Our mandate and our mission is zero carbon, right? So we're principally focused on often remote locations that have stranded wind, stranded hydro, and stranded nuclear, because hydro and nuclear, of course, the 2 base load renewable facilities that are running around the clock and have tremendous fixed costs associated with them that need to be amortized. And then scalability. So we're not going to invest the time. As you said, there's a tremendous amount of infrastructure investment that goes into developing and building a Bitcoin mine. And so we want to have a location that has the ability to scale upwards of 100 megawatts, 200 megawatts. I don't think we would invest our time in a location that was capped out at, say, 50 megawatts. It probably wouldn't worth our time.
And then Fred, so when you talk about micro locations, what's the range of power that in your head is kind of this, we can work with this sort of range?
We have pilots that are about 1 megawatt.
Wow.
In scale. And what's interesting is, we have a methane pilot, for example, in Salt Lake, near Salt Lake City. It sits on a landfill. We're literally burning methane, turning it into electricity. Our cost to produce a Bitcoin is under $10,000 there.
Wow, that's awesome.
So now, to Kerri's point, very expensive infrastructure.
Yeah.
Right? So you go where you have access to infrastructure, but I'll give you an example. On the utility scale side, in Paraguay, we sit adjacent to a dam that produces 14 gigawatts of power, which is split evenly between Brazil and Paraguay. Paraguay gets 7 gigawatts. This dam has already been paid for long ago, so the underlying asset's been amortized. Paraguay's national demand at peak for energy is about 3.2 gigawatts. And this dam actually only supplies about a gigawatt for Paraguay consumption, and then they sell the rest at a loss. So by bringing in Bitcoin miners, we actually enable the power utility in Paraguay to break even. Forget about extra profit. It allows it to break even. And so there we have the ability to scale up to a gigawatt in size.
So they actually are able to use all the electricity sold at a loss, or is there some excess that they somehow have?
Well, with hydroelectricity, you basically, how much water are you funneling to turbines?
Oh, I see. They just gate the water.
But their capacity is 7 gigawatts.
Interesting.
And so for them, the marginal cost for them to run that is just a maintenance issue on the generators, really.
Yeah, interesting. Right? Yeah, because I think clearly because the cost of green energy dropped below the cost of carbon-based energy, I think it sets the stage for a complete redefinition of how power is generated, because it is cheaper to use green. So going forward, green is going to be the thing, because it's not just a nice to have. It's like you can't be competitive unless you are a green producer. Right. But the variability that Kerri talked about is a big problem, because you have these loads that go up and down. And I don't know how many of you guys have like a black background in electronics or anything, but you can think of power grids the same way you'd think of your water faucet. Like you take all this water in and you put it up in a tower and you raise it up in the air so there's pressure, so that when you turn on the faucet, it comes out. But if you don't turn on the faucet and you put too much water in the tower, it will explode. So a lot of these power grids that don't have drainage or can just reroute the water, they got to burn that energy. So there are some places like wind farms, I don't know if it's still the case, but we looked during Bitfury days at wind farms down in Texas that were willing to pay us 1.5 cents a kilowatt hour
just to take it.
Just to burn it off at night, I think. Because the consumers weren't using it. So you get paid to run these machines, but then the cost of the CapEx was so big, you didn't want to run something only for 8 hours. You wanted to find places where you could run it 24/7. So I think with the heterogeneous input into the system, this concept of load balancing is going to be very important, because you either as the utility have to pay people to take it, or you have to just like stick it grounded into the ground and just burn it, even though you're paying for it. Or you got to find another use where you can either store it in a battery, which is very, very capital intensive, or you buy a bunch of machines and you store it in Bitcoin.
Right.
Well, and now you're also starting to see, as we get into now the third, fourth, fifth generation of machines, these machines are getting to a place where they're being replaced from a technology and efficiency perspective almost every 3 years. And so you can take machines that have been paid for already and deprecate them to a site which maybe only runs 3, 4, 5, 6, 8 hours a day. You're not having to pay back the machines now. The only thing you're looking for is a way to take advantage of zero-cost energy when it's available. And so that's a trend you're going to start seeing, where these solar sites and wind sites that otherwise are having to pay for people to take the energy, you can put essentially machines that have already been paid for in those sites and just run them for whatever hours they can.
Yeah, and there's another benefit to the utility scale, big utilities. Things that may have changed since then, but I think we were in discussions probably 2014, 2015 with countries or governments that wanted to build hydro plants, but to put up the CapEx for a hydro dam or a nuclear power, how much did your nuclear power plant cost?
So the nuclear, think about it, it's a 2.5 gigawatt, there are 1,600 employees, and not only, it's billions of dollars to answer your question, depending on the size of it, but there are nuclear plants that are being built now. There's one in South Carolina that I think started construction in 2004 of units 3 and 4. Unit 3 just went into construction, and unit 4 is still in construction. That's 14 years later.
Yeah.
Right. And so we're talking a lot now about smaller modular nuclear applications, and there's a lot of R&D and work that's being done on that. A lot of discussions in DC about that. But so for the existing assets that still have life, right? again, something has to absorb that fixed cost.
Yeah.
And they're critical to enabling, around-the-clock power for balancing out the wind and the solar and other things that are intermittent. One other thing I wanted to talk about in terms of siting, which I think is important because we're talking about using, serving as a sink, if you will, for the intermittent resources that might otherwise be wasted, is the locations and site of a lot of the fossil fuel plants that are now being retired, right? So one of the big struggles in developing or challenges, I would say, in developing a new site is lead time, right? Lead time to get transformers, lead time to get interconnection, to get an interconnection study done. A lot of these big sites of former coal plants or even nuclear plants, gas plants, have inherent and very valuable infrastructure available and can be utilized to then serve as a load balancing tool to that grid. So that's another thing that we look for. Our site in upstate New York was the site of the last operating coal plant in the state of New York, and we've since, reused a lot of the warehousing to become our actual infrastructure. We're using the interconnection, we're using the transformers, and sort of eliminated all the lead time to advance our development very quickly.
Yeah, that's great, because I think there obviously are so many misconceptions about Bitcoin miners just polluting the air and all that.
Right.
That probably happens in China, but I think much less so in the Western world. And I think this concept of giving a utility scale provider a customer first, because if you're going to put up a few $1 billion going to $10 billion for a nuclear plant or hydro, you're not going to do it unless you've got a customer willing to suck down all that stuff as an anchor tenant.
Exactly.
And then that then enables all the consumers in the cities nearby to have lower cost clean energy.
Precisely.
So the Bitcoin mining thing is very good. Just pass that word on anytime people complain about the industry. So it's such a crazy thing. Like any of you that are running a business, if you can imagine, April, there will be a block where suddenly, ding, ding, the amount of revenue goes down by half. So imagine staring in the face of a high fixed cost, capital intensive business, knowing that 4 months from now, your revenue goes down 50%. Okay, so how do you guys look at that? What do you do to prepare? What are you doing differently, if anything?
So you focus on becoming extremely efficient as an operator. At the end of the day, our business has two exogenous factors. We don't control the price of our commodity, Bitcoin, and we don't control global hash rate. We control our small bit of it. But as more and more compute power is applied to securing the Bitcoin blockchain, the difficulty rate increases. And if you look at last year, even though the block rewards didn't change, it's still 6.25 Bitcoin per block, the difficulty rate more than doubled. And so it actually, over the course of last year, it took twice as much energy to produce the same amount of Bitcoin, which is the net effect of a halving. So essentially, we had a halving last year. Now, if you look at, it happened gradually over the course of the year. In April, we have this cliff event that's going to happen. And while Bitcoin today is hovering around 45-ish, as you get to the halving, essentially it's the same as saying the price of Bitcoin just dropped by 50%. And that means that roughly 50% of the miners will be unprofitable on a marginal cost basis. And so will they shut off their hash rate? Nobody knows. But if they do, then it becomes easier for the other miners, and that kind of self-adjusts. And typically in halvings, you see about a 25% drop in the global hash rate. There's so much new hash rate coming online right now, globally, that may not happen this time around. So it really is all about being very cost efficient, lowering your cost, and then having the liquidity to survive operating potentially at a operating loss as a business until the price of Bitcoin starts drifting back up. And historically, not saying history will repeat itself, but historically, 6 months after the halving, Bitcoin achieves a prior all-time high, which in this case would be about $60,000, which in current Bitcoin terms would be about $30,000, which means most miners would be profitable. So you have to make it to that 6-month period. And so, miners that have a lot of cash on the balance sheet or a lot of Bitcoin likely will survive. The ones that don't, that'll be consolidation opportunities for the other guys.
Great. Yeah, so I was told a long time ago that if you're on stage doing a panel thing, that you either inspire, entertain, or educate. and I'm definitely not an entertainer. But I hope you guys have learned a little bit in the beginning. And there's another subject that's kind of cool that I think could be a fundamental shift in the economics of the Bitcoin mining industry, which has to do with some upgrades to the protocol, the Taproot upgrade, plus a new protocol called Ordinals. And I want to hit Muneeb now because, as I mentioned earlier on, at the very beginning when I funded the Bitfury guys, I wanted them to build a SaaS infrastructure because Ethereum didn't exist yet. And I was like, I don't know if you guys know Val, Vavilov, and George, but like, Val and George, man, like what happens when it all ends? You have to build a transaction layer so that when the rewards stop, there's still some revenue. Otherwise, it's not worth funding, you know? And so they tried to build something, and we pointed it at the wrong markets and things that didn't really, it worked, but the customer adoption was not at the right time. If I understand, like the block rewards, they're gonna get cut to 3 Bitcoin plus, you know, for a block. And in the last year, there was something called Ordinals that was introduced in April. And by August, incentive fee. So all of you that have sent any cryptocurrencies, usually you'll be asked, do you want to just wait for the next available block? Or do you want to pay a little fee and get it into the next block? And a lot of times people just ignore that incentive fee and they just wait. But the traffic on the Bitcoin network started to gap up between August and November. And it's because of these, it's become a real layer 2. So I'd love to get your perspective on what you've seen happening, Muneeb, and where you think this will go, because it's, you know, it might be the start of something very big.
Yeah, sure, happy to. So I think we've been sort of discussing the grid, which is really the layer 0 of Bitcoin, and Bitcoin itself is the layer 1. And I think this concept of like, hey, back in the early days of Bitcoin, like I started in like around 2013 or so, there was this very common theory in Bitcoin circles that any sort of like successful experiment in crypto would eventually come to Bitcoin, right? And we sort of like didn't actually see that happen for a very long time, and until last year. So last year, what we saw was in a lot of these other ecosystems like Ethereum, even Solana, other places, NFTs are a thing. Like you like them, maybe you don't like them, but they're a thing. Users use it, right? And they generate significant revenue. And one developer effectively started a NFT protocol on Bitcoin L1. And it was the first time that we saw real world evidence of that theory, that a sort of like a use case that's seeing product market fit in other ecosystems, once it comes to Bitcoin, people perceive it as more valuable. Right? So within 6 months, Ethereum NFT trading volume got dominated by Bitcoin NFT trading.
The flippening, reverse flippening.
It was the reverse flippening, right? The Ethereum market cap flipping didn't happen, but a use case flipping happened on Bitcoin. And I think there are 2 very interesting things over there. One, for the Bitcoin miners over here, that's additional revenue, right? So there have been Bitcoin blocks where the gas fees essentially are more than the Coinbase reward. So there is a path forward that even if the Bitcoin Coinbase rewards keep going down, this network, it can be sustainable because it's generating value, and people want to come and build on it. So I'm an engineer, I'm a builder. For us, like that was the best year ever. Right? So for people who are not familiar with stacks, it's effectively think of that as a Bitcoin L2. But why would there be demand for L2 if there's very little demand for the L1? So when the L1 fees start, like I think they did something like a 200x, and they went up, suddenly everyone's like, oh, we need L2s for Bitcoin. And it became like very, very clear that the L2s are needed, people want to use it. And then going back to the original comment about, hey, all the successful experiments in crypto would eventually come to Bitcoin. Now Ethereum and other ecosystem has already done a lot of hardcore R&D for L2s. And we can actually go look at those ideas, look at like what's working, what's not working, and quickly sort of like bring them to Bitcoin. So the difference is that with Bitcoin L2s, the asset is BTC, right? So one mental model I want to leave people with is, most people, when they think of Bitcoin, they think of like this one thing. I think it's really 2 different things. One is BTC, the asset, which is gaining institutional adoption, ETF, whatnot. I think, and everyone sort of like agrees with it, that as an asset, nothing compares to BTC, right? That's Bitcoin, the asset. But then there is Bitcoin, the rails. And when you see criticism of Bitcoin that, hey, we can't work with it, that NAPA kind of is slow, this and that, they're criticizing Bitcoin, the rails. And the thing that I evangelize or try to tell people about is Bitcoin, the rails can be upgraded with the L2s. Any type
just
of rails.
like the internet.
Yep, exactly. The rails will get upgraded, but BTC, the asset, is the irreplaceable thing. And when people can use the asset in a fast, cheap way in L2s, in the case of stacks, like it settles back to Bitcoin. So 100% Bitcoin security is actually securing the transaction you just did on L2. Like that is, I think, when I see that as a mass adoption because everybody knows Bitcoin, the brand name. Everybody knows like Bitcoin, the asset, and I think that's the thing people want to use.
Yeah.
So, one thing I think that's interesting is many of you may remember or not the block size, the block wars that existed within Bitcoin. Well, you have a nascent one of those happening now with BIP 300 and 301, which essentially is, do you allow miners to essentially build applications on the L1, or are you going to push it all to the L2? And there's the, on the one hand, they're the people who want it, and then they're the purists who don't want it. Bitcoin should be pure. And I think because Bitcoin is the most truly decentralized of the L1s, of the large ones, you're seeing more adoption, more willingness to develop things, whether it's as an L2 or however you're going to do it, sidechain or an L2, because of the decentralized nature of Bitcoin and the security of it. And I think it really trumps other alternatives, especially with a built-in medium of payment that you have. And I think in the AI world, as you look at micropayments and things like this, one of the prior panels was talking about that. It starts getting really important all of a sudden, these L2s and what they can do.
Yeah, I mean, as we think about our business, our goal is that, if in the next 2 years, at least 30% of our revenue is not from mining Bitcoin itself, but something related, we're doing something wrong, right? Because there's this tremendous opportunity as it relates to transaction fees and all the other applications that can be built above and beyond it. And Bitcoin mining itself has the declining, cyclical nature to it. So I think the time is now, and there's a lot of opportunity ahead of us.
And I'm curious, I don't know if you look at the stats of how much you guys are pulling in revenue mining versus other stuff, but
Yes.
I'm curious, what does that trend line look like, and is it holding, or is it, what's the shape of that curve?
It's a wave. It peaked at 22% in May, and in December it was about 17% for us.
Okay.
Now, we operate our own pool, so the difference between operating your own pool and being a part of an FPPS pool is that those blocks which pay all of a sudden 7 Bitcoin in a transaction fee, in an FPPS pool, you're sharing that.
Yeah.
Whereas when you have your own pool, you get 100% of it. So our pool, for example, outperformed one of the largest FPPS pools by about 16% in December because of that transaction fee nature.
Yeah. So I think there's a very interesting stat there. So if you talk to, let's say Ethereum ecosystem, some of their folks, one of the biggest criticisms I've seen of Bitcoin is, hey, what's going to happen to the security budget in like roughly 10 years? When the block rewards keep going down and they start trending to almost zero, how are you going to secure the network? So I think that's almost, I view that as a 10-year runway to build a thriving developer ecosystem around Bitcoin L1 with many L2s and things settling on Bitcoin.
Yep.
Like, I think that's the answer. And last year, 2023, was the first year. Before that, I can talk about this thing, but it's an idea. First time, you're like, look at the data. Like, this is happening, right?
Yep.
This is how the long-term security budget of Bitcoin will actually kick in.
Great. We were having Muneeb and I were having a discussion last night about this concept of asset versus rails. And I'm trying to come up with the right analogy, so I need some refinement here. But in one way of looking at the US dollar is it was a set of rails for gold. Right, so gold was the asset, and there was a period of time when there was so much uncertainty after World War II, and all the currencies, all the economies of the major developed economies were just destroyed in World War II. So imagine being in like Italy with a piece of paper with Mussolini's face on it, or Germany with Hitler. Like all this stuff was worthless, right? So the Bretton Woods conference was called, and there was a need to restore confidence in fiat currencies. So gold was, the dollars to gold ratio was set, and then subsequent ratios for, marks, the new mark to the dollar, the lira to the dollar, et cetera, et cetera. And then those things were kind of like helicoptered out and said, gentlemen, start your engines, new economies formed. And so I think Bitcoin in a way is kind of like that gold with the new rails. Will you describe it? Tell me.
I actually think that's a good one because now we've effectively gone off the rails, right? Because
Yes.
no longer
Yes.
do we have gold actually as the security underlying.
That changed in 1972. I mean, that's a fascinating story. If you guys don't know that history, because France had piled up so many dollars and the exchange rate was fixed at 32, they just decided, let's put all those dollars into a truck, ship them over to the United States, cash them in at the Federal Reserve, and take the gold that we're owed. And I think Nixon saw that if France did that and 2 other countries did that, there would be no more gold in Fort Knox. So it would be totally empty. So they closed the window.
It's the second time that it happened, because it actually happened during Hoover's administration, where J.P. Morgan's office overlooked the building where gold was stored, and in 19 whatever it was, saw the gold being loaded on ships and being taken back to Europe, and essentially said that the U.S. will be bankrupt in 100 days. And he went and sat outside of Hoover or Taft, I forget which, and basically said, I'm going to write a check for $100 million to the federal government if you stay on the gold standard and don't shift to the silver standard, which the U.S. government was going to do.
Interesting.
And that was the first time that happened. And that's when J.P. Morgan bailed out the U.S. government, basically.
Yes, I think on the gold analogy, I think I love the digital gold Bitcoin sort of like a mental model. I think it's easy, people get it, and people buy it as an inflation hedge or sound money. I think all of that is great. But I do want to remind people that the original purpose was also to build the BTC circular economy, also to sort of like enable new use cases, and that actually makes BTC more valuable. Like that, the big use case right now is basically passive sort of like investment. You hold it because this is an inflation hedge. That's working really, really well. But I think if you're looking into the future, like you need to make Bitcoin productive. You should be able to deploy this capital in a trustless, decentralized way. You should be able to like trade it on decentralized exchanges instead of like centralized exchanges. And I think all of that happens when you make it truly programmable and you build a very healthy dev ecosystem around these things. And I think that those are the things that I'm probably like the
Awesome.
There's a psychological challenge, which is, when you're paying for things in dollars, you're used to seeing inflation and price go up. Bitcoin, because of its limited nature, will make it look like all of a sudden, oh my God, I don't want to use my Bitcoin to pay for a bus ticket, but it'll be deflationary in nature, meaning the cost of goods in Bitcoin denominated terms will actually decline over time. So it's counterintuitive for people to think of spending Bitcoin.
Well, and on that note and the analogy, which we all need to, all of you need to help us with, we got to end because we're out of time. See the group in the bubble after the next discussion. I'll be on stage with Eric. So you guys, let's head out. Thank you.
Thank you.
Awesome. Thank you very much. That's terrific. Thank you.